We're taking a look at the TSX right now, certainly holding ground today, but is also actually one of the best performing markets in the world right now. Question for many people, though, is will that continue? And of course, also in part of that conversation is oil's falling by about 20% since the June time period. So for more on whether or not the TSX can continue its move higher, we've got Diana Avigdor joining us. She's portfolio manager and head of trading at Barometer Capital Management. Diana, we should really point out more, I think, that the TSX is one of the best performing markets, much to many people's surprise, but doesn't sound like to your surprise.
You know, we had a big rally in the sectors that matter to the TSX the most. Energy, materials, really was since February a great rally, and it has a much bigger standard deviation than any other market. If you're looking at these sectors that matter to our index the most. Now it's of course come off its highs, but we had another, remember we were talking about barbelling the portfolio between more single stock story related growthy names and the dividend safe trade. So we barbelled, and the market has been barbelled that way. And so as energy, which is so important to the TSX, has come off from $50 to $40, and some people argue it goes lower as it breaks important technical levels. We had other sectors which don't always make up for it on the TSX because they're lower weighted, but they've been very much in demand. Dividend playing, dividend yielding stocks, Rogers, Bell, the REITs. Even in energy, we've taken our energy names down, but from about 25% to about 8%. And what we're left with is single story, growthiest stocks that we can find in the sector, plus the infrastructure stocks. So things like TransCanada Pipe, which has a nice dividend yield, has been acting well, and is not that dependent on the price of oil. So
you have been of them. I mean, you've played energy, but at the same time too, you've really been looking for these other alternatives, these growthy names within the TSX or underneath the surface. So rather than just taking a look at the TSX and knowing and recognizing it's driven by crude oil and materials in terms of the broader market, you're saying to viewers, go underneath the surface and you will find some good opportunities. And you still think that that's the case?
We still think that's the case, and that's the case in all indices right now, because the sector rotation and the money flows are so big and so impactful, and there's such particular and specific stories to sectors, be it yield, be it the new world in technology, be it new technology in the energy patch. Buying the index that gives you some faultier metrics. You could be buying whole sectors that you may not want to be exposed to right now. So it is, they say, a stock picker's market right now, and it is the benefit of a more active manager that is able to be nimble and be able to move around the sectors, such as moving from 25% to 8%. Doesn't mean you have to be all in, all out. Even materials, we played the rally, we took it back in and wait. We still have stocks like Franco-Nevada, which is a royalty company, and some of the more single stock as opposed to sector exposed stock. But generally speaking, there's so many other things that are working too that you want to look at. Technology and healthcare selected names,
and some of the telecom.
And definitely some of the telecoms. Bell, Rogers.
Yeah. All right, Diana, we have to leave it there. Thanks so much for joining us.
Thank you.
And just as a reminder, BNN is a division of Bell Media, which is owned by BCE.